Welcome to another day in the Matrix. This is Red Pill Podcast 152. Hope you're all having an amazing weekend out there. I have a lot to get into today. I'm just going to jump straight into things. If you are new here, welcome to the Wolfpack. If you've yet to get access to our Discord server, just go ahead and send me a direct message on Patreon with your Discord username, and I will reply back to you in a Patreon message. Please don't comment or email me about Discord. I won't be able to help you that way. Please follow those instructions. And we're doing great with this altcoin voting system for the altcoins every week. Remember, if you are new here and would like to submit a altcoin for me to review in the following Red Pill podcast, all you have to do is scroll into the comment section of this Patreon post, comment the name of the project and the ticker symbol, and please make sure there's at least 1 year of chart history on the TradingView chart. And ideally, it's a project that we have not covered for at least 3 to 4 months. We like to give a little bit of time in between reviewing projects, just so we could build some new data in the charts and have something new to talk about. And you could use the search function here in Patreon. Just type in the name of the project, it'll come up, or you can go inside of the Discord and there's a search bar in there as well. You could sort by WatersAbove to see anytime I input a keyword, and then you could type in the name of the altcoin and you'll most likely find the Red Pill podcast that I covered it in last. So very simple. Make sure it at least has 1 year of chart history on TradingView. Multiple years is even better. And also that I have not covered the project in a couple months. And whatever projects get the most thumbs up are the ones that will make it into the next podcast. This week, we're going to be reviewing, of course, Bitcoin, Ethereum, and XRP as always. I did a very comprehensive overview of the stock market in the last week's Red Pill podcast. So if you'd like to know more about that, the traditional markets, the indices, you can just go ahead and watch the last week's Red Pill. It's very comprehensive. It talks about exactly what's going on in the general market and how it could be affecting cryptocurrency. And later on in today's episode, we'll be finishing off the podcast with covering Caspa, Elf, Ocean, Protocol, and Jasmy. So really looking forward to today's podcast. I hope you're all doing amazing. And let's kick things off today with a decode, as you're all well aware. We're in the year of the dragon, and dragon has this 59 code. And let's keep in mind that February 28th, which is coming up soon, will be the 59th day of this Gregorian year. So just keep that in mind. And this date synchronizes with Satoshi Nakamoto's mythological birthday coming up on April 5th, right around this important solar eclipse on April 8th. And these two dates are 37 days apart. Also, we have February 28th being on the day that is 307 days left in the year. Remove the 0 using the rules of numerology, and you have that 37. 37 esoterically is 3 sevens. 777, it's the jackpot number. 7 plus 7 plus 7 is 21. And Saturn is 21 in Gematria, who is Satoshi Nakamoto, and that's the date that we're comparing this to, is Satoshi's upcoming birthday. And we know this 21 is coded into Bitcoin because there's 21 million Bitcoin in supply. And, well, coincidentally, the next Bitcoin halving will be also just a couple weeks after this mythological birthday, as well as this powerful solar eclipse, the Great American Eclipse, which I also decoded. And since you're a Patreon supporter, you have access to that full-length presentation decode of the Great American Eclipse, which I brought up actually about in the last eclipse of October, and moving into this energy of April, kind of this Q2 time frame of 2024. It's a very powerful time of the year. Really kind of a pivotal time of the year as well. And we have a lot to get into today with the decode. I think you guys are really going to enjoy this information that I'm about to share about this upcoming March, not only from an esoteric perspective, but even the exoteric, the stuff that is starting to become the talk of the town for those that are interested in stocks, investing, whether it's crypto, traditional markets. Pretty fascinating stuff. And I'm sure some of you have even heard lately that in the end of 2023, a lot of billionaires have started offloading substantial sized positions, notably Jeff Bezos. I believe it could be between 4 to 8 billion worth of Amazon stock. Now, whether that's being done for tax strategy or that's being done to prepare for, well, a big turn in the market, we'll explore that later. But I believe when we're looking at the conditions that we're watching today in the market in real time, it's kind of that territory to anticipate a pullback, especially when there's so much greed in the market. And just of pretty much last week, even the crypto market is now in extreme greed in general. So we had this 3-7 code, 3 sevens, that's your jackpot number, becoming 7 plus 7 plus 7 is 21, tied to Saturn, tied to Bitcoin, tied to Satoshi. And the mirror of 21 is 12. And 37 is your 12th prime number. So mathematically, this all aligns perfectly. And all of this, again, important because it's the 59th day of the year, and this 59 code tied into Dragon 59 right there, right into our monthly close. We have a leap year this year, so we have 29 days in the month of February. February 29th is a 21-date numerology. We were just talking about that 21 moments ago, naturally making this 36 days until Satoshi's mythological birthday, 306 days left in the year, again becoming 36. We have Bitcoin giving you 36 in full reduction. This is happening on a Thursday, a Thorsday, day of Jupiter, and Jupiter gives you 36 in the same cipher as Bitcoin, again all synchronized to this 36 right here. So this will be the actual monthly close date. All markets will be closing together since it's happening on a weekday, and since a Friday follows, we'd have a weekly close for the traditional markets right on our monthly open. So to summarize what that all means in plain English, expect volatility this week, of course, especially while the stock market is at all-time highs. So the key date we're keeping in mind that I'm just bringing up again because it's important is March 11th. So, of course, as we get into a monthly close, we have options expiring. I believe it probably started last Friday. In general, leading into the end of the month, we have volatility. But because of the placement of this monthly close, as well as where it'll synchronize with Bitcoin, crypto as a whole, yeah, this is kind of just a volatile week. Expect that. And for those that are brand new to this market, like truthfully brand new, I hope you're asking questions in our Discord. I hope you're getting to, tap into the great minds that are in our community. Speak curiously, listen curiously. There's plenty of people willing to help. So use your resources more than just these Red Pill podcasts, but tap into the Discord and ask questions if you're brand new to this. I know that when it's exciting in the market, especially crypto, that's when a lot of people start waking up to this space and start entering. And I'm not here to say that this bull run is over, that we've topped out completely. I know some other analysts might have their own ideas, but I've showed you the cyclicality of the year of the dragon for the traditional markets. And there's really only one anomaly, and that was back in 1940 during a world war. So that's definitely possible. Anything's possible in the matrix, but I still see this being generally a bullish year. And if you're joining us after October, the last eclipse, well then getting into great buying opportunities right now is becoming few and far between, and you kind of really just want to consider dollar cost averaging in general. I think a lot of the time people want to get these perfect entries and get fancy with the market, but it's very tough right now at this stage. Generally, buying should have been going on all throughout 2022 into the start of the solar cycle. So that would be April of last year. This, again, I know it might be news to new people, but for those that have been here for a while now and they've been tracking along, whether that be on YouTube or here on this behind the scenes material of these Red Pill podcasts, the best opportunities were back then. Now we're kind of in the phase of just dollar cost averaging, accumulating when we can, but not trying to get fancy. I hope that's clear. It's been clear. It's only unclear to those that are very new here. So in general, expect volatility pretty much between now and, well, June. We have some updates coming up with the Fed. They'll have a meeting this upcoming month of March, right there before the lunar eclipse, followed into the end of April, after the April full moon. We have been talking about these time frames now for a while. But as we inch closer and we have this type of volatility that we're getting in the markets, I know it could be overwhelming. And for those that are brand new here, they want to try to, be perfect with very little experience. And that's just not how this thing goes. Some people have been tracking this market since 2016, 2017. They know the game. So if you're brand new here, tap into the minds of our community, ask questions, but don't try to get fancy right now because this is not the territory to do that in. It's a very elusive market. So that key date that we're keeping in mind that I shared in my Year of the Dragon decode was March 11th. It was specifically March 10th through March 15th to be the first kind of time frame to expect some sort of ritual to happen on the world stage. Now, this upcoming March 11th will be the 4th anniversary of C-19, the pandemic. It'll also be a full year since Silicon Valley Bank failed, and this upcoming March 11th will be the expiration of the... Okay, I have it up on the screen. So it'll essentially be the expiration of the Federal Reserve Bank's Term Fund Program, BTFP. Essentially, in response to those retail banks that collapsed last March, the Fed created this program. And they're allowing this emergency bank lending program to expire this upcoming March 11th on the 4th anniversary since C19 was declared a pandemic, which is also the 24th anniversary since the well-known .com bubble date, which is something I also brought up in the Year of the Dragon Decoded. So you guys are more than prepared for this if you watch that decode. And if you're new here and you haven't watched that, please watch that. It's packed full of gnosis. So remember the power of the number 24 this year. We're in the Gregorian year of 24. We're in the Hebrew year, 5,784. That adds up to 24. And this is the 24th anniversary since the March.com bubble timeframe. And what do you know it? The stock market's up there at all-time highs. We'll cover this in a moment too. So just remember the power of that number 24. It's big this year. We have the Olympics in Paris, Summer Olympics. They're even using the 24 logo symbolism. And we have the year of the X. So the .com bubble happened back in the year 2000 during the Year of the Dragon. And here we are in the Year of the Dragon. I'm just trying to add as many notes as I can to educate on this. So considering March is typically a bullish month during a Year of the Dragon, it doesn't mean a black swan is impossible during March, especially given the economy we're in today. And we've seen this happen in the past, even during a Year of the Dragon. And this data point I just shared regarding the Fed lending program and its expiration on March 11th, that's definitely a warning sign. And that could be tied into the thing that we were talking about a little bit ago with these, billionaires essentially offloading positions in their portfolio, liquidating positions. So my take doesn't change though. Overall, this year should be bullish, even if there was a pullback in March due to some sort of ritual, some sort of event, some sort of black swan. Or if there was just, it's the typical pullback that happens into the May-June full moon, like I showed in the last Red Pill podcast. So that last Red Pill podcast, again, I went over the S&P 500 every single Year of the Dragon going back to 1940. And we have a pattern. where we top out into late March, early April, followed by a pullback into the May or June full moon, depending on where that full moon lands, whether that's in late May or early June. That's typically where the pullback is. And then we get a buyback into Q4. And that would make a lot of sense considering moving into the election year. Or moving into the elections, excuse me. We're in an election year. So my take, we're overall bullish. Even if there's a short-term pullback in March, or if there's a pullback in the summertime like we usually get, all in all, we should maintain an uptrend. We know that even during this Black Swan event in March of 2020, it was a V-shaped recovery, and generally for the remainder of the year, we were bullish, also during an election year. It's totally possible. So that pullback that I'm explaining happens in every iteration of the Year of the Dragon, the one into May, June. And we put emphasis on the year of 1940 in the last red pill because that was the start of World War II, and after the market topped into the April solar eclipse, it had a correction that started in May, and it ended in the middle of June. Perfect alignment with what I just said. It was about a 30% correction, by the way, for the S&P 500. And during the dot-com bubble, the S&P topped on March. Let me actually pull that up. That might be helpful. So we're going to go back to the dot-com bubble. Here we are. So it's in this green box, this top right here on March 24th, and this was the initial pullback. And you see that the initial pullback into May, we held higher lows and had this double top effect into pretty much the beginning of September, and then we started to crater. By the way, this was when the Fed started to change their stance on rates, when they pivoted, and I think a lot of people are expecting that to happen this year as well. So just keep that in mind. Again, an exoteric data point that you could get that from almost any other analyst. Here we're focused on the esoteric. I'm trying to teach you the most about what you're not getting from these other educators, perhaps. So just wanted to bring up how during this dot-com bubble, we initially had about a 14% pullback, but we held higher lows all the way until we got to the double top of September. And then, of course, broke lower into the end of the year. But that's a textbook play right there. And it's very similar, actually, to the overall pullback time frame. I mean, it is the same late May, June. So it gave a double buying opportunity. How this could affect the Bitcoin chart, well, we have to be aware that Bitcoin has a halving in April. So this aligns nicely with a anticipated pullback, whether it's in the stock market, gold, I mean, you name it. It should pretty much be pretty synchronistic. So one note to make is on the NASDAQ. I want to show you back in the dot-com bubble time. It was a lot more dramatic, of course, because this was mostly tech and it was the dot-com bubble. So this initial correction that came in, this was 35%. And then the full correction from top to bottom into the May full moon, that was 40%. You could see that right there, 39.55. And it was right into and around the full moon that month. So it's pretty fascinating how this was very synchronistic with full moons. There was some eclipse action over here as well. So looking back at that NASDAQ chart during the dot-com bubble, I want to show you something. Look at how the market was trading here in this phase, kind of choppy into the upside. And then right when we got to October, just blasted off. From October the prior year in 1999 to this top in March. Look at the way that was going. Now, I'm going to pull up another chart and I want to see if I could compare AB, make this comparable to you. You see this chop and the pivot? It's right there in late October, and then we break all-time highs and keep going. Chop, pivot in October to all-time highs in March. So here again, this chop lasted a while too, technically, because we retested 150 days later. I know this was taking a little bit longer in general, but just look at the dip into the way that it went up throughout this whole time frame. Again, the year of the dragon, same thing we're in now. The low dip in October, boom, all-time highs. Right there into the end of February, moving into the month of March. It is the same. So that's really interesting. That's why this special is going to be called .com Bubble 2.0. Because I kind of feel like that's, we're sort of in that energy right now. A lot of this market is just up because of what the Fed's doing. This is funny money circulating in this market right now. This is not real. I mean, it is real on the charts, but again, that's how a bubble pops. It pops when liquidity is trapped and there's not real product on the other side. There's just speculation. So I think that's pretty fascinating. The structure of October the prior year, the pivot in late October, the new all-time highs, and just this explosive energy to the upside going into Q1, start of the year of the dragon, and the month of March. Is this .com Bubble 2.0? Also, note that the NASDAQ topped on the 24th of March, okay, back in 2000. And here we are moving into the 24th anniversary of this event with all these 24s coded into this year. This is right around the time of the Great American Eclipse that forms an X over the state of Texas. X is the 24th letter in the alphabet. The mirror of 24 is 42. Let me show you. .com bubble equals 42. It also equals 49. And we see this number has been a theme lately since the 49ers just lost this Super Bowl, just like they did back in 2020 against the same team, the Chiefs. And pay attention, .com bubble equals 49. Well, Kansas City Chiefs equals 49 in the same cipher. The Great American Eclipse is the day before April 9th. So 4-9 in the Gregorian system, 49. And the time frame between the two recent Super Bowls of the 49ers going against the Chiefs was exactly 4 years and 9 days. When they had their first matchup just a month later, in March, there was a Black Swan event. And the 49ers lost this last Super Bowl with 22 points. Dragon equals 22. The 49ers in Chaldean equals 59, like dragon equals 59. And this 22 seems to have a negative energy behind it, since we know the 49ers lost this Super Bowl in their second matchup against the Chiefs during the second Super Bowl to ever go into overtime, and they lost with 22 points. And just a couple days later, on Valentine's Day, during the Kansas City Super Bowl parade, there was a shooting that injured 22 people. All negative energy, all loss. And we're still within, and this is important, family, we're still within the 22nd anniversary of 9/11 until September of this year. Also, something that's kind of a little bit out there, but some of you who watched The Year of the Dragon might remember this. If I bring up the 9/11 date back to 2001, you'll know that that was a 14 date numerology. And March 12th coming up, the day after this key date, will be 14 date numerology and 59 double-digit date numerology, like dragon equals 59, just like before I showed you 49ers equals 49 or 59. So definitely something to consider here. And now, I'll bring in the element of the decode for those that are perhaps newer here or didn't watch it or perhaps forgot. So look at how 9/11 has the 41 double-digit date numerology. Well, this year of the dragon started on the 41st day of the year. And dragon in Latin is Draco, equals 41. And these dates of March 11th and March 12th coming up are the exact midpoint of the 22nd anniversary of 9/11. Between the 22nd and 23rd, it's perfectly there in the middle. So that would be 22 years and 6 months. Also, March 11th, it has this 58 double-digit date numerology, and, well, we just had Super Bowl 58. And A lot of people have brought up to me this 13 code with the Super Bowl tied to Taylor Swift, and I haven't really gone too deep into that, but just to quickly explain it, 49ers, 4 plus 9 equals 13, Super Bowl 58, 5 plus 8 equals 13, and here we have, right after the Super Bowl on March 11th, the key date that we're bringing up, 58 double-digit date numerology and 13 standard date numerology. Also, Rosh Hashanah, the Hebrew New Year, it ends on October 4th this year, and it has the same date numerology. Let me show you this. 58 and 13 matches. So this is also around the solar eclipse of October 2nd. So we have Hebrew New Year on a solar eclipse. That's pretty big. And remember, earlier I mentioned the year of the dragon started on the 41st day of the year and how Draco equals 41. Well, you have your 41 code right here. Also, 41 is the 13th prime number. So this March 11th is definitely interesting. Definitely. Considering not only the esoteric, but also this exoteric information as well. So now let's get over into Bitcoin and recap how it's been trading around eclipses and halvings in all of our past cycles. And that was this chart that I brought up at the beginning of the podcast. I tried to make it as clean and simple for you guys as possible. So let me just label each step for you all. You have these yellow lines are the cycle tops. The white lines are our bear market bottoms. And then we have the red dotted line across the screen would be the start of a solar cycle, which is always where we have our bull runs. You could see those all mapped out here. So we have a step by step. We have the top, we have a bear market, then we have a bottom before the start of a solar cycle. So let's go cycle by cycle. Top, bear market, bottom before the start of a solar cycle. Top, bear market, bottom before the start of a solar cycle. Top, bear market, bottom before the start of a solar cycle. So our solar cycle started on April 20th of 2023. Now let's zoom in to this current market, and then we'll come back to this chart. So we have over here, effectively, this was the start of our solar cycle. Before the solar cycle started, the current one we're in, Bitcoin had a 22% correction. That was back in March 2023, a month known for rituals that affect markets, and here we are less than a week out from March of this year. So immediately after our solar cycle started was right here. Bitcoin had a 20% correction. And then leading into the second solar eclipse of our solar cycle, which was right here on October 14th, we had a 22% correction, effectively. So we have 3 examples of these 20% corrections around eclipses for Bitcoin in our recent chart history. And something to note, during 2 of these examples, Mercury was stationed retrograde. And the next time Mercury is retrograde is April 1st through April 24th. So it's starting right between, Mercury will be stationed retrograde right between the upcoming lunar eclipse on March 24th and the April 8th solar eclipse. And Mercury will be retrograde pretty much through the Bitcoin halving as well. So that's big. And this is also important with the gematria because Bitcoin equals 23 in the same cipher as Mercury equals 23. We also have that 103, that code is big for the year of the dragon, and this 40. But don't want to jump around too much. Just remember that 23 match to Bitcoin. Bitcoin has a cyclical behavior around Mercury retrograde, by the way. So a pattern we discovered a while back was that Bitcoin likes to top out before Mercury goes retrograde, and it corrects into the start of Mercury retrograde. Then many times it experiences a sideways and down effect regarding Bitcoin's price action, and that was what happened around here. Kind of like a blunting of price, like stalls out the energy in either direction that it's going in. And since we have never seen an all-time high before a halving, I want us to keep that in mind. We have never seen an all-time high before a halving, and we have seen 20 to 30% pullbacks around every halving, then those are two important notes to keep in mind for this phase of the cycle that we're in now. Let me quickly show you this. So a month before the first halving, which was right here, the halving is marked with this blue dotted line across the screen. We've had 3 of them effectively. Well, a month before that, we were already bullish, getting within prior all-time highs, and then we had a pretty noticeable pullback here. It was actually a 25% pullback in this November timeframe. About 25% from those monthly highs. And note, that halving was also during a full moon, and the lows that came in prior to that were exactly around that month's full moon. And this is interesting to point out since our halving this year is right around the April full moon, and the first full moon following a solar eclipse, making the full moon before this, of course, the March full moon, which is the upcoming lunar eclipse on March 24th through 25th. Again, putting a lot of emphasis on this month of March. So, making the full moon before this, of course, the March full moon, and I think we need to consider that as part of our data, especially, that's the next full moon we have anyways, and we've had cyclical data, we're going to point it out. So let's go over to the second halving. Let me see if I could pull up a chart. I'm going to zoom in for you guys. So here we have the second halving, and you see after it initiated, we had a dump, but we rose into it, which is kind of the vibe we have right now. There was a 33% correction from the peak just days before this halving to this dump. And note, these lows here are very elusive since it was exactly between the halving and the following eclipse. You see that? Here's your eclipse, here's your halving. We were perfectly in the center when we had this. Very elusive pullback. That flash crash actually back tested this horizontal trading range. So if you zoom out as a technical analyst, you could actually see what happened here. This liquidity event, this sell-off, was just a back test of an around 200-day prior resistance. Now I bring this up because if I go over to today's charts, well, we have this same effect where we have a around 200-day resistance that we broke out of after the last eclipse. This 31K territory, it was almost 200 days. From trading into the zone, you can see it's actually longer. But if I was to take from the resistance day to the day of us breaking out, 196 days, call it 200. It's the same effect that happened back here. We had all of this resistance, broke out, and then a flash correction to back test it, and then we got bought up very, very quickly. So I bring this up because between 30 to 31K currently, that was an almost 200-day resistance, as I just showed you moments ago. That was the start of the solar cycle, just like over here was the start of the solar cycle when we were going sideways and then back tested it. That would be about a 40% correction. And another interesting note, from the highs before the 2016 halving, which were right here, to the lows that followed would be exactly 40%. And that correction was within the area of the 0.5 fib, and our current cycle macro 0.5 fib is 32 to 33K Bitcoin. And we just explored this idea of a back test of prior resistance around 31K. That would basically be a perfect correction from the current top we have slightly below 53K. You'd see, look, 40% correction would be right there. So I'm not saying it needs to happen. I'm saying that it has before, and it happened fast. It happened before anyone could react or warn about it. That's how those flash corrections go. I mean, look at it. It literally was bought all the way back up. And I could show you on the daily chart to prove this. So if we were to look at it on the daily chart perspective, it really shows you what happened. Big correction, and then off the wick, within 24 hours, we were already up 22%, and that was effectively bringing you back into a support. And it only lasted 24 hours. That was the chance. Now, I'm not telling everyone to go buy Bitcoin right now at 31K if it was to correct. Perhaps some people having Bitcoin doesn't fit into your investment thesis. Perhaps you have a very little amount of money and you're trying to invest it wisely. Maybe it's not the move to go into Bitcoin, and I think it's important to take a second to talk about that. Bitcoin makes a lot of sense for long time horizons, but if Bitcoin was to go to 100K or 120K or even 150K, is it really even giving you that much of a return on investment? But if you were talking 5-year, 10-year, 15-year time horizons, then it's very sensible. It's the same way of looking at the stock market. That's what's making altcoins more attractive, but just be aware that when you're only in altcoins, you have to be you have to really be set up strategically with an exit strategy. Bitcoin gives you a lot of time to get out and to effectively leave your position, whilst we don't really see that in altcoins. Altcoins shoot up. They could go up 1,000% in a week and then drop back 80%. It's happened. You need to be a trader. It's not as much of an investment style. And I hope that makes sense. Again, I'm not telling people not to buy Bitcoin, but I'm letting you know that the opportunity here in Bitcoin, if it was to have a correction to 40K or lower, it might not fit your investment thesis. There's nothing wrong with that. So just consider this technical move happened right after the halving, after we were very bullish going into the halving. And that's what we have today. We're moving up very bullish into a halving. Something needs to give. Too much greed. Now, during the last halving, that was in May of 2020, we had a huge correction before that. So we can just analyze this short-term top. We rose into this V-shaped recovery, and this move right here directly into the days of the halving was a 20% correction. So far, a 20% correction for Bitcoin would be coming back to around 42K. So it'd be somewhere right here. A 25% correction would be a 40K Bitcoin, so somewhere into the current horizontal support. And a 30% correction would break the horizontal support, put us into a micro spring, which would be somewhere around 36K. And then I already showed you the idea behind backtesting prior resistance, which, by the way, once we broke above this resistance over here, we never backtested it. We just broke out and Bitcoin has yet to return. That's an unhealthy breakout. It would have been better for Bitcoin to keel over there and kind of just test into the 30s, 31, and then pop, but it decided no. And note, the ETF approval was here. So it's not like this shot up like that randomly because of something regarding the ETF. This was all happening it was a fake out, There was plenty of people here that were opening up short positions. It's since been a short squeeze. So I brought up moments ago that 40% correction concept, that it would be a technical retest of the macro 0.5 fib, which sits somewhere right over here around 33K, where we started to see this chop up to another leg higher. And this idea aligns very much. If we were to have a correction to those levels, it would align with the 2016 example. And then we also have the C19 crash of March 2020, right before the halving, which was absolutely a black swan, a very dramatic example, but it's still data for us to consider. Note, there was a 40 to 50% correction around every halving. So you heard that correct. There was a 40 to 50% correction around every halving so far. And so far, Bitcoin hasn't corrected more than 30% from the monthly top since June. Right over here. Very interesting. And since Bitcoin has been doing 20% pullbacks lately, we should at least have another swipe lower to fill that lower CME gap at 39K Bitcoin. That would be about 26% correction. Yep. So filling that gap would be about a 26 to 27% correction, which would be in alignment with the general corrective energy Bitcoin has been doing lately. So another important note, before every third solar eclipse of our solar cycle, which we're moving into this upcoming April, there was a noticeable correction for Bitcoin. You have the 2013 and 2017 iterations where there were 33 to 35% pullbacks. Let me show you this really quickly. So over here, we had this March crash. Over here, we had this correction leading into the third solar eclipse. It was a 35% correction. And then back here in 2013, leading into the third solar eclipse, we had a very deep correction. The measurement that I was giving initially was off of this top here in April. And yeah, this was a very, very, very dramatic pullback. This would actually be the more accurate one, excuse me. So it was this that I was mentioning, because it was around the halving. And I think that's the best way to synchronize it. I know this data is super old, by the way. It's not as good to use data from back all the way back here, but just consider we did have a correction leading into this eclipse and leading into the halving. So all the halvings, we have some sort of correction. We don't just keep going up and up and up. And we know that we have never had a new all-time high before the halving. Considering the halving is 2 months from today, it would be very extreme to see Bitcoin do such a thing. It would be the first time ever. And if that was the case, it would be wild for altcoins. But until then, this does kind of feel like it's a trap. And there's nothing wrong with that. There's going to be a lot of altcoins that pop off out of nowhere while Bitcoin is doing what it's doing right now. That's typically what it does. So now we have enough data showing these corrections around these specific timeframes in the market cycle aligned with exactly where we are now, which is always a bullish phase with a technical pullback. And based on my analysis and what Bitcoin typically does around this phase, it's a short-term correction. It stays a little sideways, builds some structure, and then it tends to be another solid buying opportunity for altcoins. And I put emphasis on altcoins for a reason, because Bitcoin right now is nearing prior all-time highs. This is not an opportunity for anyone, even me. I would never buy Bitcoin this high. I don't care what analyst thinks it's going to go to 400K or 500K. It's too overheated for me. I'd rather hold off, invest into altcoins. I know I'll make a dramatic ROI comparatively to Bitcoin. That's always been my position. And when I do my most Bitcoin accumulation, it was always in a oversold market, right? That's what you want to do. You want to buy oversold, boring, blood in the streets. You never buy when something is euphoric, exciting, and there's greed. And if I'm wrong and Bitcoin goes to 400,000, then whatever. I'll take a hit for that, but I will never sell all my Bitcoin. I think that's the important piece here is, as a long-term investor, having at least a quarter of the portfolio minimum for the long term, even through a bear market, is ideal. And that was the case in the last bull market. That was the case in the bull market before that, and the one before that. While Bitcoin only had about a 70% correction through this phase, and it is now recovered mostly, the people that put all their chips in the Zcash basket, or in the Bitcoin Cash basket, or in the XRP basket, or Stellar Lumens, or Monero, well, it's not going so well comparatively to just holding in the category winner. So this isn't to pick sides or to call one thing better than the other. It's just we have charts that prove with data, we should follow those. And we have esoteric data to kind of round it all out. So let's move into these charts a little bit deeper. We're going to go over to this explanation of this phase by phase, break it down a little bit more since we already talked about this halving and solar eclipse idea. And a couple other notes to make. So we know, for one, we have yet to have a all-time high before a halving, but after the third solar eclipse, things get fun. So we see that after this third solar eclipse, moving into the fourth solar eclipse, Bitcoin was already at all-time highs. Here, from this third solar eclipse to the fourth solar eclipse, Bitcoin was at all-time highs. Those are the last two iterations. Over here, it was between the third and fourth. You see what Bitcoin did. Now, one other thing to mention, though, is we always get our all-time highs after the fourth solar eclipse. What I mean to say is the cycle top, We're in all-time highs, moving from third to fourth every time, but after the fourth is when we top out. okay? And we saw this even in this last example over here. We had a double top too, which is, again, its own conversation, but no new all-time high before the halving in any cycle, and between the third and fourth solar eclipse, we're always moving into all-time highs, which could effectively be anywhere after April, technically. Now that would be really wild. If Bitcoin and the whole stock market just keeps going up and up and up through April, wow, you know? My God, I mean, I'll say this right here, and I don't want to sound dramatic, but if Bitcoin and the whole stock market keeps going up through the month of April, I think there will be the worst crash we've ever seen in this market. It'll be worse than C19. Like, seriously, if Bitcoin makes an all-time high now, and the stock market keeps going up through March, through April, that's a sign that this is going to have a very, very sharp pullback, like some unprecedented sort of move. That would not be healthy right now at this stage. Be very, very wild. We have no data that's ever supported such a move, by the way. I've went through every year of the dragon. I've done analysis on March, April every year. I mean, you name it. I'm breaking these cycles down piece by piece, not only on exoteric information, but on esoteric. I mean, damn, that would be incredible to watch Bitcoin break out into all-time highs in April and just keep going and going and going with the overall stock market with no pullbacks into that May-June timeframe that we always see. It'd be wild. I know we're a lot of months out now, but if that was to be the case, I think it will follow by a historic market crash, like one of those market crashes that, like the 1987 Black Monday crash. You know what I mean? Go study that if you don't know. Okay, so getting into this, couple of notes, and it seems that we're actually pretty much on track. The only thing for Bitcoin now is, will we backtest and build a little more structure? I think that's what a lot of people are wondering, because we've seen this happen in the past, actually, that once Bitcoin starts closing macro candles up in this territory, that it heads to retest all-time highs within like 50 days. I think, at least that's what I've seen in prior data that I've studied. It'd be very weird, but hey, like that would be early across the board in so many ways. It would be early even for this idea that we're extending cycles. And some people think that we're in like a super cycle. I mean, I think we're in actually quite a healthy cycle if you think based on this one compared to this one. The fact that Bitcoin went into the prior all-time highs and tested this last peak of 2017 was so important. The fact that it did that and then bounced bullishly, getting into this area that it's in today, is actually like, it's a super bullish move, but there needs to be pullbacks along the way. And this 20% liquidity move that we had with the ETFs, sell the news, you know, I don't think that was enough. Like, a lot of people do speculate that that's it, but it's hard to believe that that would be it, especially around a Bitcoin halving and this data that we've reviewed. So I like this chart a lot. I tried to make it nice and simple for everyone. It shows a lot of the key points, pivots, all the information. Whilst we're in between second solar eclipse and halving, that's where things can get a little weird. Over here, you can see that second solar eclipse halving, we had a noticeable correction there. Over here, after the halving correction, we went over this. Moving from second to third, as we got closer to the end of the third, we were actually approaching all-time highs. So could we have a repeat of what happened back in 2017? Well, if we were to, we still had 30% corrections happen twice around that eclipse. So do we have a 30% correction right now, real soon, and then get bought up, retest all-time highs, followed by another correction sort of like this? That's kind of how a chart would act around prior all-time highs. So let's see. Let's get over to this right here. We already are aware. We had Bitcoin approaching the resistance of this parallel channel, so we have yet to really break above that. And this is a very long time chart, guys. Like, this is not a new chart by any means. If I zoom out, you see where the top of this resistance is in play. Look, bottom of the C19 crash. Go back further. Look at this. The support, bottom of the market of 2015, support before the breakout. Go back more. Look at this. First all-time high peak, gravitated up to it, hyperextended above it, hit the 1618, boom, back tested it, and look, double bottom before continuation. This is a brilliant parallel channel that's extended going back to the genesis of Bitcoin. I love this parallel channel, and the fact that it's still in play today, and we've gravitated up to it on the day of the ETF approvals, followed by this correction into the heart line. We had all this trading around the heart line. Over here, all this trading around this heart line. I mean, this is a wild parallel channel. So the idea here is that we bottomed out, and if we look at the sequence from like when we popped above it until when we entered it next time, it's about 250 days. So if we go from the last days of trading there plus 250 days, that brings us into June, late June. Let's check back in on the June full moon. There we go, June 21st, full moon. What did I say earlier? May, June full moon is typically when the stock market corrects after topping out in late March or early April. Well, that aligns right there. And that would put us on this support line around 40K Bitcoin. And I also brought this up earlier. If we pulled from the current top down to about this level, be about our typical pullback. So there's not a whole lot of opportunity here in this play for the Bitcoin market, but we know that if Bitcoin was to take a 20% dump right now, it would heavily affect altcoins, and that would be an altcoin opportunity for sure. The only time it's really advantageous to be buying Bitcoin is for the people that are very long-term and they have a, like maybe you're keeping some of your wealth in Bitcoin for your business, like that's kind of my play personally. I've opened up business crypto exchanges, enterprise exchanges, and it's like holding a piece of my earnings in that, kind of having like it be part of the treasury in a sense. That's my outlook though. Not everyone shares that outlook. Some people are just here to make tons of ROI and speculate, and like they want to be giving back 40% of their capital gains to the tax man, Do what is best for you, but I have a long-term wealth plan. I've decided to kind of treat the Bitcoin play as if I was treating like the real estate play. The only difference is selling real estate and selling Bitcoin is a different world. There's really almost zero tax benefit to investing in Bitcoin, but the ROI is obviously a lot better and in a quicker time horizon. The same thing with looking at Bitcoin investing versus stock market investing. Look at what the S&P has been doing since the bottom pretty much to the top today. It's only up 45%. Well, Bitcoin is up, just from the solar eclipse time frame, it's up 100%. That's insane, right? To think if you bought this March correction up to today, you're up 150%. So you're doing much, much better here. And you extend the time horizons. You go 2 cycles back, look at where you are today, 1,400%. You go 3 cycles back and look at where you are today, 21,000%. You keep doing this. I'm not saying that Bitcoin's just going to go up to oblivion forever, but it has the data in the charts, and I don't see why we should bet against that. On the longer time horizons, of course. Obviously, alts are going to give you way more ROI. We know this. So, parallel channel idea, pretty fascinating. Could be having a touch point into May and June. As I said earlier, even if we weren't to get this March correction, this still aligns with a needed and normal pullback. Remember, we talked about this post-halving correction that we got back in 2016, 2017, I believe, whichever one it was. And that right there, we have that in the same time frame as well. Let me show you so you can see what I'm talking about. It's right here. So we have the halving, and we have about 28 days later correction. We go to here. Imagine the halving was April 23rd or something. That'd bring you into the May full moon. By the way, that was about the time frame in every single year of the dragon that we corrected into. So this would make a lot of sense. Pull back into the bottom of this parallel channel. It's been in play since the beginning of Bitcoin. All right, so it'd be healthy and needed. Very, very healthy, actually. All right, let's open up just a regular Bitcoin chart and see some of our moving averages on shorter time frames and see if we're seeing any danger signs. Okay, so we have Bitcoin trading during a weekend, getting a little bit of a bullish move, but still lower highs and technically lower lows. So it's flagging out right now, very much looking like a bull flag. Let me look at some of these indicators. Okay, so we're on the 4-hour chart, we have a wolf cross of the 55 crossing above the 8. So the longer term moving average is crossing above the shorter term. And you see that these are pinching together now, and this has become a resistance, the 55. And we have not interacted with the 55 for quite a while, about 2 weeks ago. But by the way, we're looking at the 4-hour chart. So that's a big spread of data on such a short time frame. But now we're kind of battling with the zone. So it'll be interesting to see how this all plays out. But one thing we could do on the shorter time, pull up this fib retracement and go off of our lows to our current highs. And we're going to see this 1618 somewhere around 49K. And given that it would be on this outside of this trend line, that'd be really interesting to see how that all plays out, because this trend line has been in play for a long time now. Let me show you. You see this white trend line? This was at the current cycle low, bounced on the March 10th Silicon Valley crash, start of the solar cycle, corrected to it. Here we broke below it, but then right after, that was just a buying up because we gravitated right back to it, made another higher high after a higher low. So we're continuing trend, chopped and saw a lot of resistance on this trend line, broke above it, again, traded a lot on the outside of it. This was post ETF approval, had an inverse head and shoulders, did effectively break out. And since we have not interacted with this trend line, but this trend line has been in the conversation now for over 400 days. So I do suspect if we break back into this golden pocket and start closing dailies below this trend line, that will signal a sell-off down to the bottom of this golden pocket at around 40K. That would probably be the big condition. And it will go time frame by time frame. So we already had this bearish or wolf cross with downside implied. Then we had the 6-hour. Okay, now these two moving averages are kissing together. So typically you would want to see closures below. But I think if I had to just summarize this analysis, I would say I would like to see 12-hour candles closing below this orange line. So below 50,300. Getting below there would probably start to bring some weakness into the overall outlook, and I think people would start selling off there. That would trigger some liquidity. If we started trading below these highs of the ETF approval, filling out these wicks that were over here, and effectively trading below this 55 simple, then yes, I do think that would start to trigger some fear in the market, and we'll see everything follow suit. But so far, Bitcoin currently kind of bull flagging out, higher lows, lower highs in general. And if I was to pull up the RSI, you know that this is still a bearish divergence. High, lower high, double top on the highs, but still effectively slightly lower, and price uptrend. So RSI downtrend, price uptrend, there's a divergence. This is really a weird setup right now, especially with Bitcoin doing something it's never done before, which is closing macro candles above the top of the macro golden pocket on its first visit into that area. I think I showed you guys this a couple weeks ago. It did this whole move in about 70 days, but in past cycles, it was taking 150, 200, and even in the prior iteration, it took 400, almost 500 days. Bitcoin did it in 70, too fast. And we were supposed to, again, in this extended cycle concept. Anyways, one of the things to note is Bitcoin has also caught up to stock to flow. I believe I brought this up probably like 3 or 4 weeks before this happened and talked about the importance of this line. And especially as we get closer to the halving, we tend to interact with this line. Get back. Right. So I gave some of the analysis on the 4-hour. We already had that wolf cross getting resistance on this 55 simple on the shorter moving average. 12-hour candle closures below this orange line or below 50,000 would signal some weakness. And let's look at the weekly chart. Yeah, the weekly's looking fine. I mean, you can't really say anything about the weekly. Bi-weekly is looking amazing, very bullish. The monthly is looking really bullish. Yeah, if something's gonna happen, it kind of has to happen out of the blue. Look at this. This was during the automatic rally phase of this cycle over here. We were greens until a pivot, and then we could argue that was this moment here. But when we look at where we're at today versus this top to the prior high, that's actually where we're meeting. Very similar. Let's look at the bi-monthly. We will be closing a bi-monthly. Wow. My God. Incredible. Long-term Bitcoin holders rejoice. Monthly's looking fire. I mean, 20% up. Incredible. The weeklies could be showing the first signs of stall out though, especially with that bearish divergence that I pointed out. So yeah, some of the conditions here on the daily is closing below the 8 simple moving average and clearly getting resistance there. Let's look at the 21. Okay, so all of these key moving averages are pinching together, and this is where I'm going to wrap up my analysis, because we know we have that CME gap around 39K, and we have our 200s meeting up to that level. A back test on the 200s would be fine, and also fill those gaps, and then that would probably be enough of a condition, like the minimum condition of a pullback. But note, that's still over a 25% correction for Bitcoin, which would bring an opportunity, buying opportunity for all coins. So closing below the 21 is typically a trigger point. So keep that in mind. Ethereum also topping out about 4 days ago. Very bullish day today, but still higher lows. Haven't technically closed below the 8 simple move, or the 8 simple. Yeah, so keep that in mind. Bitcoin has effectively started closing below the 8 simple and treating it as a resistance, while ETH has bounced. So we'll see how that goes, because this is just the very beginning of this development. But also consider, if we have analysis for Bitcoin on the daily of the 21 EMA, we would shift that to the 34 exponential for the Ethereum chart. So a closure below the 21 for Bitcoin would be what we would want to see on the 34 for ETH, and then we would get a deeper correction. Let's see where these 200s, okay, beautiful. So our 200s are now aligning with the 0.5 fib, and that would be copying the move of Bitcoin essentially. So if there was a 26% pullback on Bitcoin, that would be like here on ETH. It would be right above, but it would be tapping on the 200 exponential. The 200 simple could be caught up by then. So anything around the 0.5 fib would be a pretty solid buying opportunity for ETH. ETH is looking pretty damn bullish, but it is just caught up to Bitcoin effectively. This isn't like alt season. You would know alt season because you would see this shit. Or you would, I mean, again, ETH would have to just continue raging to the upside, but I'll show you what's going on here. You see this phase? And a break of all-time high. Well, ETH is only at the 702 and the all-time high is at 4,800. So we're either in the very beginning of an alt season, if a miracle happens and Bitcoin just goes straight to new all-time highs now, which I brought up earlier, that would be a bad scenario actually, because it would be leading to a wild crash, more than likely. And yeah, I don't think anyone actually wants that, especially in an election year. I can't figure out how that would make sense. But yeah, ETH breaking into this sub 618 territory, that would be ideal for some final accumulations. Now XRP, on the other hand, this is still in buying or accumulation zone. XRP is still a buy. Not financial advice, I'm not a financial advisor, but it is now really in the final moments, coiling up into its next move up. And I can't talk too much to this play because I've already shared my thesis on this, even in this last, the interview podcast that I did with 3T in the Good Morning Crypto show. I talked about kind of what's going on right now with XRP. Let me adjust these trend lines a little bit. I mean, it's really a tough coin to be playing with trend lines because of this nature that it has of big liquidity injections followed by pretty arduous pullbacks. This is just one of many bigger patterns that we've watched in play. But for me, I'm going to show you what I think. Until we clear the 70-cent range, we're going to have some chop. So that's really that area. I think that's 70 to 0.5 fib area, 70 cents to 0.5 fib. So that's 76 cents. Once it clears that, it could go to $1 in a single day easily. But we do have that to consider. That 0.5 fib is big, and XRP has not really done too well dealing with it. I want you guys to keep that in mind as long-term XRP holders. As long as it's below that level, in my opinion, it's still a buy because it's below the 60-cent level, and it's definitely still an opportunity. And it's been riding on this long-term support, making higher lows since, so that's effectively very bullish. If it was to break out of this pattern, the technical level is 45 cents. Now, if it was to do that, that would be a sign of danger. But one thing to mention, we'll go back to the past. Look at how XRP traded in the final moments before it just broke out in a straight line. You see this from March to April into May? Look at how it traded in a downtrend. Well, that's really no different than what it's doing now. And look at this volatility, very little, underperforming compared to a lot of other things. You see this, right? I mean, so would it be weird for us to be kind of to the downside, downtrend, boring out the investors, and then we know we have that grand trial in April. We have developments happening this upcoming March. We know that the stock market could be very bullish into late March, and we could have even early April. Well, we know we have kind of this overall bullish energy going into this market. Holistically, XRP is lagging behind, but this to me can definitely bring a lot of attention to XRP. The fact that it has this SEC case coming to its finality. This is why I'm speculating on XRP right now, and I'm putting more of my energy into that rather than caring so much about what Bitcoin's doing, because I know when something's overheated, it's an opportunity to de-risk. I've de-risked effectively on my Bitcoin position. Bitcoin's only about 6% out from where I de-risked, so that's irrelevant to me. The XRP play has a way more opportunity. So continuing to accumulate. I'll probably make any last minute accumulations if there is one more pullback across the board that gives a chance in XRP at this 49-cent level. For anyone who's like more savvy out there and knows how to set limit orders, go ahead and do that if you're somebody who's trying to make buys in this next phase, because it could be very fast. And I'm not just talking about XRP, I just mean in general for any of the assets that we talk about in today's podcast. So we're going to go over to Kaspa. Okay, so Kaspa effectively taking another leg higher, and it's been respecting this trend line now since its genesis, essentially. So this is a very powerful trend line. Whoever's invested in this thing, keep this in mind. Now, this is very interesting how it has these sideways moments, hits the trend line, pops up, hits the trend line, sideways, pops, hits the trend line. Can that keep going forever? I think a lot of people are wondering, can this keep going forever? Well, now we're hitting in this 0.6, this 6 fib extension. Now, I think that that's a fair one to do because of how sideways this was. And when it started to break into this prior high, it had this head and shoulders fake out. So you see this head and shoulders vibe. Excuse me one second, I need to clear my throat. All right. So you see this type of move. This is a very big fake out. And all we did was back tested the 702 fib on this particular chart, or within the golden pocket. That's all that counts. And then again, a double top kind of vibe, like, or what's going to happen here? But a slightly higher high. Then backtesting this trend line has been everything for this project. Like, it continues to feed off this trend line, build a little market structure, take another leg higher. The 6 fib is a danger zone. All right, I teach this in my crypto mastermind course. Again, any of you who are Patreon supporters here, you have access to a 20% discount coupon code for all of my courses, including the new decoding mastermind that just launched. But that crypto mastermind teaches this concept on a linear fib pull. So when you have the fib pull and this is turned off, that 6 is it's getting overextended now. Also bearish divergence. Yeah, there's a lot going on here. But what was the general opportunity? Let's see. Okay, this thing is 60% up from the prior trading range. So if people were buying in on this past moment here, let's just call right around there. Yeah, you're about 500% up. That's probably it. I'm not sure how many people were getting in before this moment. If you were, fantastic. This is going really well for you and you could de-risk accordingly. I mean, but this seems to be sort of in de-risking mode. But, you know, very speculative. It is an altcoin. Definitely speculative. Let's see a couple things here. Get any 17s. Topped out at this 18 level. 79's 22nd prime. Okay, this is going to be tied to the gold number, and this is the year of the dragon. Dragon tied to the sun, tied to gold. 21 tied back to Saturn. Saturn's timing, father time. 137 is your 33rd prime number, so definitely a very powerful thing to consider there. And 1 plus 6 gives you the 7, a Saturnian number, 777 equals 21. And this 15 is fascinating too. Yeah, I'm trying to see if I could have some things pop out to me. Another 33, remember Caspa. Cas has the 137, this is 33rd prime. Here we have 33, Caspa. Yeah, 79 is 22. Yeah, this is a big one for me. I think this 22 is not something I would look away from. Powerful code with 49ers. Also just the 22s in general. We're in the year of the dragon. Gives you 22. You can see Caspa and the ticker together giving you that 22 because of the 79. 31 is the 11th prime number, so we get that 1-1, the Twin Towers. I also believe the day of the Super Bowl. Yes. So the year of the dragon, started on an 11-date numerology, 1-1, the master number. And K is the 11th number. Sorry, the 11th letter. That could be big. The 1-1. K backwards. I think that's their logo too. And the logo has some green in it. Again, green tied to the color of the dragon. Also, look how it bottomed out around 0.11. 11. Where did this initially top at 3? Okay, it topped at 0.42 initially. 0.42, 42, tied to Saturn. Okay, so there is some Saturnian code in this as well. K is the key. Interesting stuff. Yeah, I mean, 22 would make a lot of sense to me. Some code there for sure. But yeah, it'd be so weird for this to pivot at 19. That's a death number. That'd be no bueno. Especially, was this exactly 0119? Oh shit, it was. Okay, well I think it's right there. The low was 0,119, 911, 119, right? And now it's hitting into this day over here, the 20th of February. It hit pretty much 19 cents. It tried to. What was that date? The 20th of February? So that's the 2/2 date. Okay. This thing has a very interesting yet simple pattern. You know, you got to give it that. Very simple. Touches the trend line, pops over and over. See if it's respecting moon phases. Kinda, not even. By the way, not all altcoins respect the moon cycles. That's a very Bitcoin centric thing. But yeah, we could clearly see here the initial top on a new moon pulled into a full moon effectively, and then we had full moon second buying opportunity. Again, a little pullback into this full moon, rose through this new moon energy. This was the start of a solar cycle, by the way. And during the start of a solar cycle, when Bitcoin had its correction, this thing corrected 65%, while Bitcoin only corrected 20%. So this thing has a ton of volatility. This is a fascinating project. I'm really surprised it went up another leg higher. But I gotta admit, it's from the center, like majority of this trading range that it's just gone up only 55%. I don't think this is an opportunity anymore. You know, this is buying something at all-time highs and expecting much more ROI, I think, is greed. No offense to anyone. I'm just being a real one with you right now. This is a distraction, in my opinion. I think a lot of people maybe just want to know, should I get the fuck out of this thing? That might be that might be your question. Should I GTFO? And I wouldn't do that just yet. I think de-risk if needed. By the way, de-risking means get back your initial investment. If you have a very small amount of money in this thing and it's just like gambling casino money, or it's called venture capital money, you're willing to go to zero and it doesn't make much sense for you to de-risk early in a bull run, well, then keep it. Have fun. Enjoy the ride. But yeah, the fact that this thing has effectively been respecting this trend line now going on 480 days. If we were to have a black swan, and I want you to pay attention to what I'm saying, if we're about to have a black swan, this shit will dump hard, okay? Hardcore. Because if it breaks this trend line, you don't know what it could do after it falls through a trend line that it's been respecting as a support for a majority of its life cycle, right? It's liking this trend line, but we don't know how it really behaves if it starts closing macro candles beneath it. I'm just saying. And plus, what does it matter to be buying at a top on something that maybe at best you could eke out another 50% when we have so many things that are oversold that have a lot more upside potential? So this thing is gassed out, in my opinion. Yes, it's gone up 25% from the prior top after breaking a new all-time high. What is 25% for an altcoin investor? Come on, guys. We see this shit left and right every day. I think this one project we're about to look at, Jasmy, it just went up 25% like yesterday. So yeah, I'm not telling you to buy Jasmy. I'm not telling you to sell CAS. I'm just saying, like, remind yourself there's a lot of opportunity here. If you have 100% of your portfolio in CAS and you've been in it since 0.006 cents and you're up now fucking 2,700%, consider de-risking. That's all. Words of wisdom. Okay, we're looking at ELF. Woo. All right, cool. This is some different charts. Oh, macro chart. Cool. I like these. Okay, so we're looking at a long-term chart. This is wild. We have a all-time high back in 2017. Off the bat, this is behaving like a shit coin because it never went into new all-time highs in 2021 like everything else did. So since it's launched, effectively still down. It's down 80% from its current all-time high right around launch date. There's really nothing bullish about this thing, but I could sense people might care now because ever since the November lows, which is when everything else bottomed, this thing has had a buyback. Here's your effective like last solar eclipse, and this thing is up 100%. A lot of coins are. Now, what it's doing is it's bought back up to this really important range of the golden pocket. This is what I teach. So now that it went into the golden pocket, you see the way it behaved. It just right to the top at the 786, harsh rejection, and now it's holding support on the 618. This could, I mean, I'll let you know what I wish this thing would do. I think it should chill out, maybe test a little bit in this range here at 50 cents, but it should build support inside of this golden pocket so that it could hold higher lows. And then when it wants to go into an SOS or like some form of retesting of the prior all-time highs, it could break above it. And then if it was to return back to it, it won't break below the bottom, the 618 level. This is a very pivotal moment for this project because it was only able to get into the golden pocket at alt season time of 2021 when everything else was in already all-time highs, trading into like what would be the 1618. This thing wasn't even able to break above, right? So I'm not interested in this. It doesn't have the performance. It's a very awkward looking chart. I mean, effectively is up a bit off of whatever supports at the lows, even at this cycle low here, looking still about 400 to 500%. So that's solid. That would be better than buying in things like Bitcoin Cash or a lot of other, like, I think this thing is even technically outperforming Dash, doing way better than Zcash. So yeah, there's that. But it's like comparing a fresh diaper to a 2-hour-old diaper. It's still a diaper full of shit. Like, I'm just being honest here. This is a very speculative play. Consider it venture capital. But with chart performance like this, I would not bet on something that wasn't even able to go into highs in the alt season without really any reason. Like, the reason it didn't happen for XRP was obviously because of the SEC Ripple lawsuit. But even then, if you take off the correction, which was around December timeframe to this top, this thing did 1,500%. XRP still did about 1,000% in the same move. So I don't necessarily want to say this thing is doing better than XRP because XRP has prior cycles, right? It has the 2015 cycle where it went up 40,000% or something. This project can't even break above this current all-time high. So it's very speculative in that case, and it's maybe not something I'd pour too much of my energy or money into. I'd be very careful with that. Okay, here we have, is it Ocean? Let me move this up. Oh man, TradingView is just, it's always up to something, isn't it? Let's put this next to Casper so I could really confuse the shit out of myself. Just kidding, I'm not confused. When you do this full time, it's hard to be confused. All right, Ocean. Great. Okay, so we have prior cycle. You see not too much chart history though. This thing, pretty nice run, 10,000%, mamma mia. Followed by 95% correction. So I would feel safe calling this the buying climax. This was your selling climax. This was your automatic rally. This was a backup kind of ish. And now you're in SOS. LPS. This would be your SOS. Powerful. This is great. Yep. So where we're at right now is kind of a de-risking territory in a lot of cases. But very contingent on Bitcoin at this time. One other thing to mention is this. You see this right here, how we went parabolic straight greens forever into this moment, and then it followed with a 70% pullback. Now, that's the same level we've effectively topped out within today. If this thing had a 70% pullback-ish, it would be coming into the same support territory that it did back here. So let me draw a line across the screen, and I'll be speaking a language that everyone understands. So you see here, boop, W, return, break, rejection, got above, boom, 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 pop. This was a very powerful level, 28.29 cents. Call it 26 to 29 cents. Key level. So if we were to get rejected anytime soon and Bitcoin was to have a bigger pullback, that would be the area I would expect. That could be the spring, making this effectively kind of like a wonky. Yeah, well, it's an altcoin. Altcoins are wonky. Let me just show you kind of something like this. Hit the 236. And then, I know it's a little deep in the year, but you get what I'm saying. Boom. Game time. But looking very good. Short term. Getting up into this area after holding on a prior support. Let me see how many days this was. This could give us a good idea. So breaking above this level and 270 days. Amazing. So that's looking really good. Kind of like a cup and handle vibe. But yeah, no, this is looking pretty good. Where are we at with gains since buying this territory, the bear market territory? Only 350%. So that's typically what we get during like a macro automatic rally. We get about 3 to 500%. That's right there in the range. And given that it's the 702 fib, that's where I would be cautious buying right now. Like I would not buy this thing right now. That's why we initially started off the analysis with saying it's more like a de-risk. Going up 350% is always a solid play. Yeah, and this could very well head in. This could very well head into this 0.5 again, and even back into this major support trend line. We saw it happen over here when we extended and broke past this level. We back tested with a 70% correction. So de-risking is always logical in these times. But venture capital, small positions, don't sell it all. Never sell it all. We're not done yet. All right, we're looking at Jasmy, and then we're going to wrap this one up. This is all the data we're working with. Okay. So, huge sell-off. 99%. My God. Okay, 99%. Trapped under this 236, which was a prior resistance or support, excuse me. We had the support here for about 129 days, got bought back into it, some sort of double top M pattern, which had a sell-off, double bottom, solid, another lower high. And then this backup phase was pretty much telling you that, yeah, we've spent enough time in this area because it popped off. That was 500 days, by the way, below the 236. Plenty of time to accumulate this thing. So off of just quite recently, actually, this broke out. Okay, just back in January. So this is up 250%. So it's sort of catching up now. And off the middle of the range, it's about, yeah, it's still around that 300. Maybe if you got really good entries, 300 to 400. Yeah, so that would be about the range that we see. Right now, the fact that it's coming up into the 382 and got a little bit of a rejection candle like this, red closed, it'll be interesting to see how it reacts to this because we don't really see macro automatic rallies until we're concretely closing above the 382. So let's see how that goes essentially for Jasmy. What could it do in this area? But if it could break out and go higher, you have this clear level here at 5 cents, and that's right below the golden pocket and the 702 fib. So, you know, this has a lot of room to the upside, but that's a big level for me because you see it launched here, Christmas tree top, hyper extended the downside, but then when it came back up into the same area, big rejection. So it could come back up to there, but we have all of our prior trading range up there. If it was to just come up to there and get rejected, then it could come right back down to this 236 because there's thin air. There's really little chart history, what I'm trying to say. So it could make quick moves, but then it could come right back down just as fast as it went up. Again, highly speculative. I think I played around with this altcoin a little bit, but I didn't feel confident enough in long-term exposure. So decided to go with my intuition and my gut, and ultimately I'm doing fine in my portfolio across the board. So I'm not feeling like I missed out at all. It doesn't really matter to me. There's so many opportunities in this market, but having this 500-day resistance effectively get broken, and then now touching on this 382, there's definitely room to the upside. I would look to this 5 cent area, as I brought up earlier. It aligns perfectly with the 618, the macro 618. And as long as this thing doesn't roll over now, it could effectively keep popping off, isolated from everything else. But if Bitcoin's going to turn around right now, I would assume a retest minimum of the 236, and the technical level would be somewhere around 007. All of this prior rejection resistances. So I'll just mark some lines to give you guys a visual. Okay, so we had all of these tests, break of support, gravitated back up to it 3 times. That would be a very clean level. And then if it was to go much deeper, it would be here. So that would be a pretty big, I would assume that's maybe a 70% correction. Yep, there you go. So that's very typical actually for altcoins. They love 70% corrections. Look at that. From this high to this effectively this low was 65%. It's normal, totally normal for altcoins. If Bitcoin was to have a 20% correction, an altcoin could have a 55 to 60% correction easily, especially something that has a chart like this. So I'm going to leave it at that. I appreciate every single one of you. I hope you enjoyed today's podcast. I am wishing you all a beautiful rest of your weekend, and we'll be sharing updates midweek if there's any progress in what's going on. I think the traditional market's opening up, and seeing what CME is like and leading into this monthly close will definitely be a very volatile week. But I'm keeping my focus on this right here, this March 11th Fed bank lending program expiring. It's making us moving into March very confusing for many, but I think these billionaires selling early and that becoming the news just a couple weeks ago, plus what we have here with this expiration, Bitcoin hyperextended, stock market at all-time highs. It's a very precarious area for us to be bullish when everyone else is also bullish and greedy. So just tapping into the intuition with this now, and had plenty of data to show you with all of these charts. All of these examples here of a little bit of a correction either before a halving or around a halving, and including the solar eclipse data. So we have plenty to work with. Continue to take notes on this stuff, and I'll be catching you guys in the next one. Much love.